Hello everybody, this is Matador from freetradingvideos.com. Happy April Fool's Day. It's April 1st, 2009. And the markets gave us a little bit of an April Fool's joke today, actually, on a big gap down that's now fully recovered from that. The gap down was caused by some economic reports showing that job losses in the private sector accelerated pretty heavily in March. And that also revived worries of high unemployment, as well as there's also fears of struggling automaker General Motors could be headed for bankruptcy. Again, just reading a little bit of Yahoo Finance here. Also, what turned it around was some more news. So this factory and home sales data, they show that the economic slump might be moderating. So here's this gap down this morning. This is the 3-minute chart again of the S&P 500, right back to previous support areas that I had drawn in. You scrunch this up, you can see that this head and shoulders, inverse head and shoulders down here, little swing low. Let's see what the $78 mark is right in here from before. Boom. So gap fill. This stock then gaps down to here this morning, and so this whole area down here becomes support. Didn't even make it all the way there, which is encouraging, before coming all the way back up. So I can zoom back in, and fills this gap completely from the morning right to there, which is very, very powerful. It goes way past it. That's way more than a 100% retracement. Has a better chance of making a higher swing low then, even into these resistance areas back here, and we're off and running. So on the way up, I would say we've got this, and guess what that corroborates with? Our $81 now, or 80. So this whole area in here, if you scrunch this up, that's that unfilled gap. So here it is. This is what we're fighting right now. So we knew that from yesterday. We knew it from the day before that. We talked about how this was going to be troublesome now on this big gap down. First test, now we're doing a second test of this area. And above that, we'll still be fighting into this 82, 82.50 area that we've been talking about for weeks. So here this is, and then all the way out to a daily chart. You can kind of zoom in, and there's that whole gap with the $82 mark with this gap back here. So a lot to fight through on the way back up, but we are holding up beautifully. Even with just a few little breaks, we're still heading up nicely. And if I take apart the tick and the trend, as we always do, kind of zoom in here a little bit on a 3-minute chart. You can see we're at 0.66 for the trend, which is very nicely bullish, but not overly so. And the trend Q, little spike just now as we're talking, but had been in the 0.6 area. Now we're in the 0.7, 0.75 area, which is also bullish, but it's sort of approaching that area where we would become neutral. Sometimes, again, the VIX can be telling. The VIX is staying low right now, which is great. And as always, we would want to see this heading south to corroborate a nice move to the upside. So we'll see if we can get it, but again, that's a lot to fight through on the way back up in the form of these gaps that we've been just talking about. So pretty good. We'll see what we can get. If we hold up nicely here, a break above 81 would let us at least test this area again, which in here is that gap fill. So I would say the 81.50 area first, then 82, 82.50, and then of course 83. So it's neat that these round and half round numbers, so the 50s and the round numbers are also so powerful. So just a quick run around the markets for everybody. Love it. Your comments again are very well appreciated. Keeps me coming back. So take care, everybody. Again, happy April Fool's Day, and talk to you soon.